Hi everyone, welcome to the ACCA Academy. In this video, we'll cover the Chapter 1 Specialist Cost and Management Accounting Techniques. Today, we're going to break down activity-based costing in a simple and easy way, so you can understand how it works and why it matters. Let's get started. What is activity-based costing? Activity-based costing, ABC, is an advanced costing methodology designed to address the limitations of traditional costing systems. By focusing on activities as the fundamental cost drivers, ABC provides more precise cost information, enabling better decision-making. It is especially useful in organizations with complex processes and diverse product lines, where traditional costing methods fail to allocate overheads accurately. In traditional costing systems, overheads are assigned based on a single cost driver, such as direct labor hours or machine hours. This often results in inaccurate product costs, particularly when there are significant variations in the resources consumed by different products or services. ABC, in contrast, identifies multiple cost drivers and allocates costs based on actual resource usage, providing a more granular view of costs. Next topic is key concepts of activity-based costing. ABC revolves around understanding how activities contribute to costs and ensuring accurate allocation. Let's break down its essential components. 1. Activities and cost drivers. An activity is any task or process performed to create a product or service. Examples include machine setups, quality inspections, and material handling. Each activity has a cost driver, which is a measurable factor that influences or drives the cost of that activity. For example, the number of machine setups serves as the cost driver for setup costs. Identifying the right cost driver is crucial for accurately tracing costs. 2. Cost pools. In ABC, costs are grouped into pools based on activities. For instance, all expenses related to machine setups are grouped into the setup cost pool. Each pool captures the total cost of performing a specific activity, providing a structured approach to analyzing resource consumption. 3. Activity rate. The activity rate is a key metric calculated by dividing the total cost in a cost pool by the total quantity of the cost driver. For example, if the setup cost pool totals $10,000 and there are 50 setups, the activity rate is $200 per setup. This rate ensures costs are allocated based on actual activity levels. 4. Allocation of costs. Costs are assigned to products or services based on how much of each activity they consume. This allocation method is far more accurate than traditional costing, which often relies on broad averages. ABC ensures that each product or service is charged for the resources it truly uses. Next topic is steps in implementing activity-based costing. Activity-based costing is implemented in a systematic way to ensure accurate cost allocation. Here's a step-by-step explanation. 1. Identify activities. The first step is to identify all the activities involved in the production or service delivery process. These activities can be broadly classified into value-added activities, tasks that directly contribute to the creation of value for the customer, such as assembly, painting, or packaging. Non-value-added activities, tasks that do not directly add value but are necessary for production, such as rework, inspections, or waiting time. Understanding these activities helps distinguish where resources are being consumed and identifies opportunities for improvement. 2. Assign costs to activities. Once activities are identified, the next step is to assign costs to each activity to form cost pools. A cost pool is a grouping of all costs associated with a particular activity. For instance, the setup cost pool includes all expenses related to machine setups, such as operator wages and equipment maintenance. Similarly, costs for quality inspections or material handling are grouped into their respective pools. This categorization helps in accurately associating costs with the specific activities that generate them. 3. Determine cost drivers for each activity. Identify a measurable factor that drives the cost, known as the cost driver. A cost driver represents how resources are consumed by the activity. Examples include number of setups, drives setup costs. Inspection hours, drives quality inspection costs. Material movements, drives material handling costs. Choosing the right cost driver ensures that the costs allocated to each product or service reflect its actual usage of resources. 4. Calculate activity rates. Calculate activity rates refers to determining the cost per unit of activity in an activity-based costing system. It involves dividing the total cost of an activity by its total activity driver units, enabling accurate allocation of indirect costs to products or services based on their consumption of specific activities. 5. Allocate costs to products or services. Allocate costs to products or services refers to the process of assigning indirect costs, such as overhead, to specific products or services. This ensures that each product or service bears a fair share of the total costs based on factors like resource usage, production time, or activity drivers. Thank you for watching part 1. In this video, we discussed the activity-based costing and key concepts of activity-based costing and steps in implementing activity-based costing. Want to continue learning? Check out part 2 where we discuss target costing and key elements of target costing and steps in target costing and advantages of target costing and challenges of target costing. Don't forget to subscribe to the ACCA Academy for more educational videos.